Gold is currently around $1,800. I'm sure you're jumping up and down naked in your bedroom when gold goes up. What is your price prediction for gold by the end of the year?
Well, obviously, I don't have one. I mean, I don't know where the price of anything is going to be at the end of the year. But, I do think that it's more likely to be higher rather than lower, although it's possible that it could be lower. But if it is lower, it's not going to stay lower. I mean, gold is ultimately going much, much higher than 1,800. And when I say ultimately, I don't mean like, in 100 years or something like that. I mean like now, I mean soon, it's going to go up. And I think the only reason that gold is not already a lot higher than 1,800 is because most people still believe the Fed. For whatever reason, the Fed still has a lot of credibility, and so do other central banks. And so when the Fed says inflation is transitory, they accept that. When the Fed says we have the tools and we will use them to make sure it's transitory, even if in the event that it's not, the markets believe the Fed. So the market is not looking for insurance. It's not looking for inflation protection. The market is just looking for risk. The market is just buying whatever's going up. Everybody is optimistic. They think the party will never end. And so they don't really see the reason to hold something stable like gold, something that's regarded as a safe haven or as an insurance policy. They want to gamble. They just want to keep on buying the stuff that's hot. And that includes a lot of different types of stocks, a lot of these momentum stocks or meme stocks, these risk assets. And it includes, what you guys talk about, cryptocurrencies, digital assets, Bitcoin, Ether, or these NFTs, right? That's what people want. They just want all the stuff that's going up, and they don't even realize that the reason it's going up is because of all the inflation that the Fed is creating. And if it ever actually tried to fight that inflation, all that stuff would come crashing down. So, but they haven't connected those dots yet for whatever reason.
Is there a piece of you that thinks, okay, let's say that the Fed is inflating asset prices, which I tend to agree, right? They're basically devaluing the currency, asset prices are going up. And rather than fight the Fed and say, hey, they're going to change their mind, they're going to do something different, or, I'm smarter than the Fed, they're going to inflate asset prices. I want to buy the assets that are going to go up. And so just go invest in the market rather than wait for them to make some, miscalculation or kind of rip the Band-Aid off, as you said. Like, do you think there's validity in that argument of just don't fight the Fed and just go buy the assets that they're going to pump up in price?
Yeah, I mean, that's what I'm doing myself. But, I am buying assets that I think represent better long-term values, not these highly speculative assets that I think no matter what are eventually going to collapse, right? I mean, whether the Fed, pricks the bubble with rate hikes or whether the bubbles just deflate, on their own, that is what happens to bubbles. I mean, they never just continue indefinitely. So yeah, I don't want to own cash. So my personal portfolio is long equities. I own a lot of stocks all around the world, good quality companies that I think are trading at low valuations, that have high dividend yields, that are in sectors that I think are undervalued. They're in countries that I think are more stable and where the governments are not going to be under as much pressure to debase the currency, to sustain budget deficits or trade deficits. I do have a lot of focus on resources, natural resources, commodities, not just gold, but all sorts of industrial commodities, energy, agriculture. I have emerging market exposure because I think the emerging markets will outperform the developed markets in an era of higher inflation and dollar devaluation. I own physical gold and silver. So I'm fully out of the US dollar, and I understand why other people would have an aversion to hold dollars. I would just argue with their decisions on what to buy. And maybe some of the things that other people have been buying over the last 5 years or so have done better than what I've been buying in general. But I don't think that's going to hold up much longer. I think ultimately the portfolio of stocks that I've put together for myself are going to prove to be a much better performer in this environment than a lot of these stocks that have done well so far, but I think will not do well when we really start to see the inflation take off and the dollar really collapse. And then I also own real estate. I don't only own stocks. I mean, I have money invested in real estate. Again, real estate is a real asset. And again, all real estate is not the same. And so, some real estate is different than other real estate, but it represents a viable alternative. Because when you have inflation, you have to understand that not only is it a tax where the government takes your purchasing power and gives it to somebody else, but it's also a giant transfer of wealth from creditors to debtors. So the people who have borrowed money make wealth or transferred purchasing power at the expense of those who have loaned the money. And if you think about it from the government's perspective, the US government is the biggest debtor on the planet Earth. I mean, it's probably the biggest debtor in the whole universe. I mean, to the extent that there's life on other planets, I'm sure they haven't borrowed as much as the United States government. So we're probably the biggest debtor there is in the universe. And as the biggest debtor, the US government has the most to gain from inflation because it screws over all of the people who loaned it money. But when the government is screwing over all of its own creditors, they also screw over all the private creditors. And so you don't want to be a creditor, you want to be a debtor. And that's one of the reasons that so many people take on so much debt. But of course, the best thing you can do with the proceeds from the debt is to acquire real tangible assets, whether it's real estate, whether it's stock, whether it's a private business, because you buy something real and then you end up not having to pay for it because you borrow the money and you buy a real asset, and then inflation destroys the value of the money, and then you pay back the loan with practically worthless money, but you still get a real asset. Whereas the lender loans you money that had real value, and you pay him back with money that has much less value.
Hey guys, bang bang. Thanks so much for watching the Best Business Show today. And don't forget to check out our partner, SoFi. They make all this possible. They're a super app that lets you save, spend, borrow, earn, and invest all from one single platform. And if you go there today and you sign up for a SoFi Invest account, you can get between $5 and $1,000 for free from SoFi. Not everyone's obviously going to get $1,000, but everyone gets something. Don't say that I never did anything for you. Go check them out at SoFi.com/pomp. Download the app and go ahead and open an account. SoFi.com/pomp. And make sure you come back and watch more of the Best Business Show. We're going to build the biggest business show in the world, and we need your help.